here's some basics basics in the industry. Describe what is a cap rate.
Oh no. So cap rate, NOI, net operating income divided by your purchase price. So easiest metric, or one of the easier metrics in the industry. A lot more detailed metrics go into our analysis, but cap rate's a good, initial barometer of where deals are, and it's also a way that we're valuing property, so it works both ways. So when we're looking at a property, we're looking at what's the current income, in-place income, what are expenses, what changes can we make to that, when taxes reassess, what's the impact of that, ultimately down to a net income before debt, and dividing that by the purchase price gives us a good point of reference from other assets.
Where are they now in multifamily properties? Is there a band you're looking for, or is it regional?
Who are you asking? No, there's a difference there's a chasm right now between buyer and seller. So the buyers are coming from the sellers are coming from a market where they were selling a deal 6 months ago that's a 3.5 cap market.
Which is crazy. Yeah.
But interest rates were in the twos. You now have a market where interest rates are pushing 4, 5, 6, and you've got a seller or you have a seller who's going from that 3.5 to now, hey, I'm giving you 100 basis points increase, I'm at 4.5. The problem is, and what's creating the divide right now, is the buyer is looking at a 6% interest rate, high fives interest rate, and saying, well, that's too much negative leverage. I really need to be pushing closer to a 5. So that's why you've seen a lot of the transaction activity of late really just take a pause. So a lot of our competitors, especially institutions right now, are sitting on the sidelines. They have buckets of money. They need to deploy it, but there's this chasm between buyer and seller of where they view the cap rate value of their property.
Can you make up for it with the Core Plus?
We can. So that's why that's one of the aspects of looking at a Core Plus deal is we'll start out with potentially a little bit of negative leverage, but throughout the first year, through executing the business plan and not relying on rent growth, relying on just natural growth through the business plan, we're able to make up for that negative leverage.